presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for Tom O'Brien. I'm the host of the Target Technicians Hour, 10 a.m. to 11 a.m. market days. That's Eastern time, of course, and the author of the Opening Call Daily Newsletter. Now let's look at some of the patterns that I work on all the time. Let me just show you this quickly. In the Chapman wave, we try to identify the lowest low bar. We count each successively higher peak, alphabetize them sequentially, A, B, C, D. D is where other things can happen, that fourth highest peak, but it can still go to E, F, and G. There's never an H. The other thing we look at here is the patterns, only 3 patterns, straight up, straight down. It's a straight line. Cup formation, could be a V-shaped formation, but it's a cup formation basically, and an arch formation, a mix of 1 and 2 or 1 and 3. This is 1 and 3 where the H goes to the left side low. If it goes there after just one peak, like a peak A or a peak B, and then fails, it usually goes below it. You've got to be careful. And on the right side, straight up means if it makes this cup formation, takes out the left side low, how it does that is really important. So that's the core to the Chapman wave. I use many other things as well. And so what we're looking at here is the Dow trading at 233. You see this? Let me just widen this quickly. First of all, I'll show you the pattern in the large form because this is what the Dow has been the leader, and we've been liking it for subscribers to my opening call. I've liked it for a long time. We're actually still long from the low of March the 23rd of 2020. And but within that context, we've taken some profits, and we also have had short-term longs and shorts. But now what we're looking at, we have a rather aggressive long position. And what we're looking at in terms of the pattern is you see this cup formation, and you see this little H pattern here that just took out the left side low of 28,715. On the 13th of October, it went to 28,660 within 50 points. And the MACD, the moving average convergence divergence, was moving higher. All of you have it on if you do any trading through online. I'm sure your trading platform has the MACD, the moving average convergence divergence. And then there's the slow stochastic. I use the slow, not the fast one. The slow one gives you a longer time period, and it's holding well, but it has gone under 80%. I like it over 80%. And the blue line you see here in this daily chart is the on-balance volume. It's not that strong, and the relative strength, the RSI, is actually holding very nicely. But the key action that we look at here is when the 9 goes over the 14. You can see what happened here. This green, actually talking about a green line, you see this green line over the black line? And it's still holding extremely well. And that says that even with pullbacks, you'd have to get a move down to under 31,000 in the Dow to see that 9-period move underneath the 14-period, which would be very negative. So far, the Dow is the leader. Dow 30, it's not the Dow Industrials. I don't know why they call it the Industrials. For ages, we've been talking about it as really the Dow 30. Then there's another technique that I look at here. Here it is. You see how I joined the upper edges of the wicks in the candles? So 36,952 on the week of the 5th of January. That was the high. Keeps coming down, makes lower highs. And I have a pattern that I take one trend line, and then I see if I can make a parallel line, a very thin parallel line that says this should be the resistance. I call it the repellent zone. When the price goes above it, or in this case, it was the propellant zone. And when the price goes and tests it and then successfully pushes away, it's like a magnet when it attracts the price and then it reverses and propels the price. Well, the Dow is in the inside track as we're closing out with 45 or so minutes to go for this week, Friday, and we'll see where this closes. But it went into, touched that edge in a peak B. All the others have failed at a peak B minus, B minus. Peak A failed right there, 36,824. back in the early part of 2022. So this is a really important moment for me because in this particular pattern, if there is a close, a decisive close above this arch formation in this weekly chart, and that says if the Dow can get, I'll give you the exact price right now. I used to have it 34,500, I think. Yeah, 34,261, the high of the 19th of August, the week of the 19th. If it can start to close for 2 out of 3 weeks above that, we have got a trend change in the weekly chart that is very significant. Why? Because the MACD should get even stronger. The stochastic, which is only at 43%, that's not very good. And the on-balance volume still needs a lot of work. But that 9 period, for the first time in a while, will cross positive. And if it can hold positive, that's going to be a really strong support level. I said, talking about these moving averages, I like to do things live so you can see these. I did it this morning. I'll do it again now. But I didn't show you something that I've just done. I wonder if I've got it here. Yes. So I was asked about the YM. This is the 10-minute E-mini chart. I actually have, this is still a leg A. It broke above the 50% level from the low of the day. What I wanted to show you was ESZ22, ESZ22, there it is. Look at the strong, powerful move. So there's a pattern that I call the Eiffel Tower. It happens very often after the Fed makes an announcement, or there's just something that, jobs report, whatever it is, and the market sharply spikes to the upside or the downside, but in this case, the upside, and then comes back down. Well, what happens sometimes is it goes straight up. This went to an A and then pulled back, and then it went to a B and then failed. But I typed in Eiffel Tower A pattern. That means that A says you can come down and be careful of the key support levels. Well, what did we do? We made, over a period of time, we've made, look at this. Here's a 2-minute chart. Look, this is a 2-minute chart. It shows you that this went to a peak C1, C2 that acts like a D, pulls back. Look at the time. I talk about bar symmetry. Look at the bar symmetry here, and look at the bar symmetry. I did it in another time frame where from that low to that low, look at the arch formation. It just missed matching exactly. I did it a little differently. Let's see if I can do this again. I did it in a different time frame. I just don't want to go there right now to find it. So let's just go right there. And what I do is, you don't have to have these rectangles. You can just have a straight line, or you can just do it. You can count the bars. I just do this so that when I demonstrate it live, you can see it. And look at that bar symmetry. Is that not unbelievable? From the low that was made in this 2-minute chart at 12:06 this afternoon, Eastern time, at 37.16, we rallied, made an arch formation, came down, and at 13.10, that's 1:10 this afternoon, it goes to where? 37.17, slightly higher. And then what does it do? 2 bars early, it makes a low. And what is that low? Right there at 37.15.25. And now it's gone. Peak A, B, C, D. There should have been an instant restart, but there isn't. So I continue the count E, F, G/C. And here you've got D, and we're in leg E. And I had drawn this, I don't know where I did it, but it doesn't matter. All right, I'll do this, and then we've got a lot to discuss. Basil Chapman sitting in for the one and only Tom O'Brien, and I'll be back in a moment. The Dow is at 255.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Chapman sitting in for Tom O'Brien, and I see a question in the Tiger YouTube about, I'm not sure if this is a question, but a statement. Frank says, weekly chart on A, B, C, D pattern. So this is, I'm not sure if he's talking about realty income, which is the symbol O. It's trading at 62.79, up $1.16. But it's interesting because I've had a number of stocks that have, as screens, have come up, and they're in the realty area, but it's more the income. So this is a leg C in the daily chart. The weekly chart is only a leg A. It's stopping at the 14-period moving average. But if this realty company, realty income, it's a REIT, I guess, 62.83 right now, can close above 63.35, then that whole 64 area, and you start to get to this ugly candle of the, where was that? This is the ugly candle of the 15th of September, which has 63.38 low and 65.95 high. That's really what you want, because the closer you can get into the 65s, that 66.12 200-period exponential moving average becomes a magnet, and it's been a repellent since it broke down back in the 2nd of September. So that's that question. But while we're talking about it, let's just go to the IYR. Yes, you see, when I looked at these shares, the iShares, Dow Jones US REITs Index Trust, I think it's still struggling, and you can understand with rates higher and all that. Yes, there are going to be some companies that really benefit because of the income that they're getting deriving from rents, etc. But overall, I think it's a bit of a problem. So what I want you to do is to go through in a little bit more detail. So I wanted to show you, look, here's gold. This is the daily chart. No, I typed it in the wrong place. I'll just type it over here, GC. So gold, huge move. The MACD is good. In the daily, the stochastic's kind of weak at 44%. On balance volume, the blue line is okay. It's not great. And the 9 is, if there's a good move by Tuesday of next week, then the 9 should finally cross over the 14. But what's interesting is, I've been talking about this for some time, is that silver in many ways has a better chart pattern than gold. And look at it today. It's up 1.5 at 20.93, up 7.7%. And look at this. Peak A and then a quick peak B. I have a rule of 136, so it goes one bar rest and then it goes to B. But then it goes 1, 2, 3. The fourth bar, it goes higher to C, and then it has one bar rest and it screams to a leg D, very close to the 200-period moving average. The previous peak D in the daily chart, the fourth highest peak, failed back in late September in the 21 area, and then of course it pulled back to 18. So silver, in many ways, even this even the weekly chart finally, you can call it inverted head and shoulders. It's not perfect, but most importantly to me, it's made a trough D and is now forming a potential for a cup formation. But the monthly chart is still kind of ugly. It did a 1-to-1, a little bit more than a 1-to-1 to the downside. More importantly, what we're looking at is, are we looking at high-grade copper? What a move. It's gone even more since we were speaking at the update. 3.69, up 2.69, up 7.8%. This is a huge move. Is this an E or is it a B? But if you look at the weekly chart, the rectangle formation says that don't get too excited, because every time you get too excited, it just stalls at about 3.8. So we're watching this very closely. There's another pattern that I'm looking at that matches, and that's the UNG, natural gas. Did nothing. And what I'd said is, in my show, The Tiger Technicians Hour, is that we're watching it closely, because could it be building a spring, a loaded spring, so that finally in the wintertime, as the wintertime comes, you get, which natural gas was doing nothing. But this is a really good move at 20.84. I'm talking about the United States Natural Gas Fund, up $1.75, and it's starting to fill gaps. Well, of course, anything that trades overseas always has gaps. But most importantly, what we're looking at is if the UNG in the next, I'd say by the whole, give it the whole of next week, if it's able to get to 21.86, 21.96 in that area, then the 22.98 200-period moving average, which is a magnet, it couldn't get above, it just wiggled around like a sine wave, up and down like a yo-yo, finally broke down. That becomes a magnet, and finally you can get, and I love to do this, you see this trend line right here? Look, from this low, we made a double bottom. And I've been talking about these double bottoms, how incredible it is that you've got on the upside, I spoke about it for ages, that there were double tops that were made. Look at the double top that was made here in this alternate count in the natural gas here at about, this is a continuous contract, back on the 10th of June at 10.29. This price changes because it gets smoothed out, but nothing changes. The waveform, nothing changes, just the price. So 10.29, and look at this. And then back August, it goes to 10.71. After weeks and weeks of a huge move down, you get this V-shaped pattern. I call them Groucho Marx eyebrows. Comes down, makes the schnoz, then goes back, makes the eyebrows, and then comes back and takes out the low. So yes, it says finally natural gas could start to move. It's in leg C in the daily chart. The question came up just as I was going to do the show. Let me just get this. Yeah, could you look at crude oil? Well, crude oil, CL, continuous contract is in leg D. How important are these leg Ds? Very, very important. Oh, I meant to say, I can't remember which chart it was. It was making a very quick peak A, then a B, and then a quick B and a C and a D. When that happens, you can expect that there's some kind of a pullback coming up really soon. It's not a turn, it's not a major sell or anything. It just says be careful, because you could have a little pullback. If you haven't been in some things that you're looking to get into, this will be your opportunity. And the weekly chart, this is the first week that it's actually broken out of this down channel and the Chapman Wave inside track repellent zone. So we're going to be watching this very closely next week, because we got to look at the XLE. XLE is trading at a new recovery high underneath the 93.31 June high in a monthly chart, making a U-shaped pattern. Remember, we're looking at cups and arches and cups and arches and straight lines, and we'll see whether it makes this little double top. It's in leg C in the weekly chart, and that previous high in the 93 area. Today's high is 93.02. So these potential double, and all it says is double top means you don't have to crash, you just have to have a digestive phase. And that's what we're going to be looking at as a potential next week. But at the same time, if the dollar continues down, now it's gone even more, down 2.05. If I say our dollar, because we've been long since 89, and in 2018, we've been ridden it all the way up to the 121 area, all the way back down. Our UUP, which is the dollar bull, has held, and we have taken a little bit off fairly recently, because we've said big consolidation going on. But wait a minute, USD JPY, they kind of move in the same direction, not the same proportion, but the same direction. There's the pattern that I call that dreaded H potential right here. So at 146.7, if at any point you see the US dollar, Japanese yen currency pair start to trade. It can't just go there once. On that 50-period moving average at about 144, all of a sudden you've got yourself something that says lower highs, lower lows, and that finally will help gold, help silver. But will it also help the commodities? We are long the DBA for quite some time now. The DBA was acting quite poorly. This is the Agriculture Fund. But if you look at some of the grains, like wheat, had a big move up, pulls back. If you look at soybean, it's running very strongly. Looking at corn, holding steady. So we're going to be watching to see what the grains do next week. I'll be back in a moment. Basil Chapman for Tom O'Brien. We want to look at Apple and a whole bunch of stocks as soon as we return. Dow is up 243, S&P's up 32.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Folks, I had a question about the 9 and 14 moving averages. Look, here's a 2-minute chart of gold. And it made a low at 8:30 this morning with the news jobs report. And then what happens is it spikes. And then from that spike, which is at, there's a 2-minute chart at 8:36. Let's just say you got the high, 1656. Well, look, it held all the way to a peak E in the Chapman wave. And then it reversed. And just for a very brief moment, you see how that green line was so positive? Look, for 4 minutes, it went negative. And then it broke out again, and it went, oops, I forgot to put that plus sign in. A plus sign, and it goes peak A, B, C, D, and again, another E. Remember, the objective in the Chapman wave is to get you from a buy signal to a buy mode, meaning you should go to at least a D. Very often it goes D, and then very quickly an E, and then pulls back. Well, lo and behold, look what happened. It went to a peak E, and you see this channel over here, this down channel, how it broke out. I love these channels. And then it broke out. And here's what's called the falling axe in the Chapman wave methodology. What happens is it goes straight up, and then you start to make lower highs and much lower lows. And at some point, a buy signal kicks in, and if it breaks out above this trend line resistance, it can do a 1-to-1 to the upside. Well, it goes peak A, B, C, D, and this is at about 12:05 this afternoon. Pulls back, goes sideways, makes almost a cup formation with another peak A, B, C, D, and then pulls back and goes A, B, C, D again. How many Ds have we seen? Ds and Es. And then all of a sudden it pulls back. This is at 2 o'clock. The market was a little hesitant. And then it starts a brand new move and goes peak A, B, C, D, E, and then has a sudden spike to an F. Then it pulls back. And look at this. Except for these two red bars, one was 2 minutes long and one was 2 minutes long over here, 4 minutes long, here at about 2:20 this afternoon. That green line has been positive since 8:30 this morning, even with that, it was positive until 8:30 until it turned down at about 11:25, and then it crossed positive again and kept you in the trade all the way through until that brief moment at 2:10, and now it's still green, and it's got a rectangle formation with the Chapman wave says in this particular pattern, you can go, if you pull back sharply, they make higher highs and higher lows. In this time frame, you can get to a D. Sometimes it can go all the way to the previous high, just on, just under, or just above, and then it can pull back sharply. Well, we're stuck in this range right now, isn't it? And it's still green. So I just wanted to show you that. Now let's look at Apple. So Apple made a peak D. Remember, fourth highest peak, you got to be careful. Above the 200-period moving average, a big struggle to hold above the 200-period moving average. Every time it went there, failed in the 157-ish area, and today the low was 134.38. That means it took out by 37 cents or something, whatever it is, the low of the 13th of October at 134.75. And you can see this arch formation failed at where? The Chapman wave. You can see these patterns now unfolding just as we were talking about them. You can see here's these falling axes, the lower highs and much lower lows, turns around, tries to make a cup formation, fails at the inside track repellent zone. My target for Apple has been under this one. If it breaks under the 129, 127 area, it can go all the way to the 120, 119s. In other words, what's happening now, and this is really so important, that's the reason why I've been so impressed with areas that are cyclical. How, when we're about to, or we are in some kind of a recessionary period, can Caterpillar do so well? Look at this leg C in the daily chart. Just today alone, it's up 3.7% to 227. Broken sharply out of the Chapman wave inside track repellent zone. Now it's a propellant zone. And look, it's testing it in the monthly chart. Usually when it does this, I become very strict and I say, yeah, that was a little bit of a leeway I gave it. Now I'm going to the top of that candle, right? Whoops, wrong trend line. This is the monthly chart on the right. The top of the candle right there. And I'm doing the same thing with the inside track repellent zone. And let's just see if it's able to, there, I'll just do that and that. And then what I always do, I'm able with this particular platform to change colors whenever I want. So not me, change the chart pattern. So here we are. This is going to go green, and this will be pink. And here's your repellent zone. Just a real simple technique. Just tells you that the second arch formation right here, if it can turn into a positive cup and make the second U of a W with lower lows and lower highs, if that pattern changes, then we can close above, or you have to close, but break above the high of April of 237.90. Now, why do I bring this up? Because look at this. Honeywell is cyclical. A leg E, it's gone to the left side, right side price time match. Look at this. In the cup formation right here. Look at that. Sometimes I usually like to use the plumb line at the bottom. The exact, it looks to me like the number of bars on the left can equal the number of bars to the right. But this is a little different. It's a little lopsided, but it did the pattern and it broke out above it. But why is Honeywell Aerospace Building? Talk about aerospace. Look at Boeing. Leg E right at the 200-period moving average. The last time peak D, it failed there, and it pulled back sharply from the 170s down to 120, 20.99. That was, I think, late September. And now it's in leg E, and it's bumping into resistance. And you can see what will happen in the weekly chart. You've got this whole area still to come, but it's really good action. And that's really what's happening. We are starting to see prices for the whole year have been coming down in those incredible NASDAQ stocks of 2021. Now the money is still flowing out, and the money is going into other areas. Fund managers are looking for something different. So that's why you can get something like a Johnson & Johnson, made a peak D, pulling back, but it's broken out of the upside channel, but it's holding okay. So some of these defensive stocks, this is healthcare and drug manufacturing, etc., Johnson & Johnson, these are holding a lot better. So I want you to look at that. I want to also show you OIH. The OIH goes with the oil, obviously. This is a FANEC Oil Services ETF. It gaps up to a leg F today at 313.56. But if you look at the MACD, that's very good. Stochastics flat at 88, and the on-balance volume is a little low. So there's nothing here that says that it should pull back. But based on everything I'm looking at these oil and oil service, the sector, having a little bit of a breather over the next 2-3 weeks, just a breather. It doesn't mean to say they're going to crash or anything, but some kind of a time lapse where money gets taken off, gets deployed elsewhere, and then starts to get put back there. Looking at the VIX index, this is something that is all week we've been looking at the volatility index. Actually, all of last week, I was saying that VIX index, this looks like the dollar. Look, it made this peak D, pulls back, makes a cup formation. Then at the 34.88 was the high in the VIX index on the 28th of September. What does it do? It goes to 34.53. But when it does that, the MACD was weaker, the stochastic was weaker, and we anticipated they could pull back. Well, it pulled back sharply. This is October the 12th. 13th, of course, was that big move to the upside. And what we're looking at is it made the arch formation in that dreaded H. It took the left side low out, and it's done almost a 1-to-1 underneath the 200-period moving average. And now the weekly chart kicks in, and you can see we're at support. Is the volatility index in an area right now that it holds and starts to rally as the market weakens? Or is this telling us, the VIX index has been very clear that buying of the insurance has started to slow down. In fact, it's more selling the insurance. And that's the reason why I still think this market is holding really well. Leadership in the Dow. I'll be back. Leadership up 311 in the Dow. S&P is up 38. We'll be right back. Basil Chapman sitting in for the one and only Tom O'Brien.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi, folks. Just had a YouTube question. That was, where was it? Let's see. Rochelle wanted to please comment on GWW. That's Granger WW, distributor of maintenance, repair, and operating MRO supplies. I followed this for years. I didn't actually look at it for a little while. I mean, followed it just because it's a name that I kind of recognize. And the other day I picked it up and thought, oh my goodness, this is part in that whole cyclical area of the market. So what I thought I'd do is I've done all the charts. I hadn't finished the daily, and I picked it up and I had this peak D back in August, and it plummeted from 580 down to 480. But I wanted to show you, look, here's my plumb line. It means that the number of bars, if I'm looking at this, I'm saying if this turns around, it can take out a certain level. I can see the same number of bars going back to the high in the 580s in this time frame. So here I am. It's a simple technique. You don't have to have the rectangle. Trade Station has all of this. You can just have a straight line, or you can even just measure it, count the bars, put a little X in there, and then count the number of bars, put another X in. I have the opportunity here to change colors because I like to show this in my show and for my subscribers to my opening call every day. So here we go. Look at this. There's your plumb line, and it went above the high, the double top high of 588.43 on the 15th, and 588.62 was the high on the 16th of August. And it comes down sharply to the 480 level. And look at this. It takes out the high on the 1st of November, 2 days before the plumb line. And I always do this. I show you, you can make a V shape. I have the arch potential, so I'll do the left side Quoro. That's the half a semicircle right there, and that takes you to, that's where it should be, but this is where it breaks out. Look at that. Is that just not perfect? Then, of course, I also have what I call the Chapman Wave inside wedge. I didn't do this, but I would normally do it. There's a particular left side area that I looked at to start this Chapman Wave inside wedge target resistance line. That would have been it right there. Everything worked perfectly, and we didn't have it. I'm just showing you this is the work that I like to do. This is one that kind of was on my radar, but when it got to that big, I think I saw it the day of that spike. I thought, oh, I haven't looked at this for ages. So there it is, and now it's in leg C. It should still go to a D because all the technicals are very strong, and it's in the Chapman Wave inside track repellent zone in leg C in the weekly chart, and I've got a Chapman Wave inside. This is an instant restart at that peak D. If within 3 bars, it takes out the left side high of D and starts in E, that can actually recycle and go to a whole brand new buy mode in the monthly chart. And that's the reason why I can't get overly negative on this. We have no shorts at this particular time. A question came in, could I look at Roblex? Roblex. I haven't notated this for, I have. Okay, this made a peak B way up at 140 something back in after the IPO in the 50s. It screams up to 141.60 in November of 2021, exactly a year ago, has a little bit of a problem, and it comes down to the 33s. Well, I notated this when I think I was doing my show or something. I showed the arch formation, and the 3051 retested by going to 33.20. I mean, 31 cents, and then it takes off. And that, what I talk about is that the H pattern can become a very positive cup formation if it can close above the arch high. Well, it did that. It went to a peak D, stalled at the 200-period moving average, and pulled back. Now, I've got to emphasize that this is in the category of money that got thrown at this particular stock willy-nilly, and because of it, there wasn't veracity to Roblox gaming platform game. I mean, I used to have, I bet I don't have it now, but I think I used to have, let me just check it out. Sometimes I'll get the CEO being interviewed by Kramer if I'm able to hear it. No, I don't have it. Almost at the top. Oh, wait, I do. No, I don't. And what happens is the CEOs, I've got so many that were interviewed right at the top. And there they're talking about how fantastic Shopify was one of those. Oh, great company. We're doing this, we're doing that. And then what happens is that turns out to be the top. I tell you what we're going to do right now. We're going to go to Rich in Oregon. Rich, how are you?
Fine, Basil. Thank you for taking the call.
My pleasure.
I've got a question about recent activity and was wondering what your chart was indicating to you for Aerojet Rocketdyne.
So talk about a rocket. This has gone to a peak. If you take the trough that was made in the daily chart at, that was in September, just under 40, it went to peak A, right there, peak B, right there, peak C. It's in peak C, and it should go to a higher high above the high of the 2nd of November of 50.09. But the MACD is so strong. The stochastic is flat at 87%. I love when it's flat and just trading in the high 80s, preferably the low 90s. On balance volumes a tad overbought, so this could go a little higher. Looking at the weekly chart, it's gone peak A, peak B, then you start again, A, B, and then again. So that's C, D, E. This move up now is either, I usually do an alternate count when it breaks out like this, saying it could be old E, but at the same time, it could be brand new B. You've got to do some assessment, but the daily chart is going to give you more of that information. And the monthly chart is really choppy. This is something that you have to strap your seatbelt on, right?
Yes,
because
they had a lot of internal problems where they were trying to get control of the company. Two different parties.
Oh, okay. So it's not the actual business part of it. It is more a technicality. So let me just say to you, in patterns like this, where it's had such are you long?
Yes, I am.
Okay. So then I'm going to say to you, patterns like this, I like to look at symmetry, bar symmetry, pattern symmetry. I'm going to grab the high that was made in April in the weekly chart. I'm going to pull it down to the doji candle low. I'm going to start moving it to the right, and then I'm going to take my measured move from that level to the base right there of the doji candle, and I'm going to click it on, and I'm going to say, now I'm making it green, new parallel, green, and it tells me that we've gone back to that previous high, and the technicals are still strong, and that just says to me, look at that. It's 1 week late of testing the high that was made right there of the week of the 18th of June at 49.84, even though it's been all the way down to 35. And it's gone peak A, peak B, C, D, E. Oh, this is an F or a B. I like it very much. I think there's something going right with this company when in this particular market, this kind of time frame, it's doing so well. So I'm going to just suggest two things. One is, as it retests this particular level in the 50 to 51 area, if you're thinking of just like money management, maybe you can take a little bit off, and that's you can put that back, the little bit you take off, and you can put it back maybe 3 points lower at the 46. At some point, it is going to test the two. The doji candle is in the middle of a gap to the upside once, and then a gap to the upside. That was the gap of the 25th, where the low is 46.62. So I'm just going to say to you, I don't want to mess around with your trade. You've got the trade. You've done beautifully. If it goes above, let me just do this right now. If it goes above 40.84, it starts in the monthly chart. It says leg C. And
the technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV.
Hi, folks. So Rich hung up, but Rich, I know you'll be listening. This should go to a leg D. At that particular time, I can see, and that all it needs is another 8 cents to go to a leg D in the monthly chart. So the daily chart just needs to go slightly above the high of 3 days ago, 50 right there, 50.10 would make that leg D. But if it can go a little bit higher, it breaks out above and goes to a leg D, and you've got the cup formation. Then what I like to do, and I'll do a little bit more, I'll make a note right now. I'll do this on my show on Monday, my Tiger Technician show at 10. I'm actually doing 2 hours on Monday because I believe Steve will be away. So I'll do 10 to noon. So we can go through AJRD. A lot of people ask, what was the stock? Very good. And why is this doing so well in this particular environment? That's what I'm talking about, selectivity. So let's go through this as we wrap up. I'm Basil Chapman sitting in for Tom O'Brien, but we're looking at the Dow up 368 at 32,372. On Monday, I'll have to talk more about this candle. I will for my do the video overview for my subscribers tomorrow to the opening call. But in the meantime, I like this action because it's closed above the low of 2 days ago, and it's closed nicely above the doji candle high of yesterday. I'm still liking it. I think we could make a cup formation and retest the 33,000 level to 32,900 for the Dow. Looking at the S&P, this is real quickly. And Al, you're going to have to, I must hear the music to be able to know when to wrap it up. So S&P is not acting as well. It needs 38.25 to really say it's heading towards the high, and it definitely mustn't go below 36.90 this in the next 2 days. The QQQ lagging badly, still doing poorly today. It's only up 3.5, but it needs to get to the 373 by Tuesday or Wednesday of next week. IWM is doing very nicely. That's got it needs 180. It's a 178. Gold is looking really good. For gold to continue higher, it can't have these 1 or 2 day spikes and then give it up. Gold needs to get and hold 1720. It's a 1684 right now. Very nice candle. Folks, Basil Chapman, sitting in for Tom O'Brien. Check out my opening call, my daily newsletter, and my show, 10 o'clock to 11 Eastern Time, every market day. Have a great weekend, and we will see you next week. Tom will be back.